Hello guys, welcome back to the channel. This is your boy Hassan, and today I'm back with another banger, another video. Today is a Saturday, 7th of June 2025, and I'm going to be giving you this video. I'm going to do take you through basically my strategy, that is the top-down analysis combined with supply and demand for precision or sniper entries. So basically what I do is I do the top-down analysis, that is from the high time frames to the lower time frames, and then I execute using supply and demand. That way it helps me, the top-down analysis helps me to get the entries. The top-down analysis helps me to get the direction of the market, like to generally know the broader view, where is the market heading, especially on the high time frames. And then I come down to the lower time frames to do my executions, and when I'm doing my execution, it simply helps me to know that now we are in a downtrend, and where do I enter from and how do I enter, like what are the things that I need to see in order for me to execute my entries. These other strategies are good, and most of the strategies, to be sincere and honest, they are good strategies. However, they do not give you entries. You'll find a lot of videos on YouTube, people doing top-down analysis, ICT, SMC, what else, trend lines, chart patterns, anything, but they do not give you those precise entries. That's where the problem, okay, that's where I find issues with their strategies. They don't give you precise entries. Someone will say, yeah, now this market is heading to the south. Yes, it is heading to the south. Or this market is heading to, we're in an uptrend. Now if you're looking for to enter, just look for only buys. Yes, I know we are an uptrend, and we know that when we are trending in the bullish market, we need to buy. But how do we buy? Do we just buy because it is an uptrend? No. Do we just enter because it is a bullish market? No. Yes, we know it is a bullish market. We know we want to buy, but how do we buy? How do we enter into our buys? That is now where the issue is. So today, that is what I'm going to be showing you in my videos, and most of them, that is what I'll be talking about: how I trade, how I analyze the market, and how I enter my trades. So what do we have on the screen? We have GBPJPY, and this is the 4-hour. Oh guys, before I proceed, guys, subscribe to the channel. That is always a norm. We help this channel grow, so always you have to subscribe to the channel. So guys, before I proceed, subscribe to the channel, and then we can go ahead with our video. So guys, subscribe to the channel. 5 seconds, subscribe, then we proceed. Okay, I hope you have subscribed to the channel. That helps the channel to grow. So we have GBPJPY, and this is the 4-hour time frame. However, we said the strategy is we go to the high time frames, do the top down analysis, and then end up on the lower time frames for our entries. So I'll start with the weekly time frame as my high time frame. Some people go to the monthly time frame, which is good. You'll see the overall picture of the monthly. However, I don't plan to hold my trades for month. Why? Because I'm a retail trader, so the maximum I can hold, I want to hold my trade is for weeks. I can hold for 2 weeks, 3 weeks, 4 weeks, even 6 weeks. But I'm not primarily focusing on holding trades for month. So what do you see on the weekly time frame? I'm going to show you in this video. I'm going to show you 2 examples. What do you see on the weekly time frame? And guys, this is the way that I trade. You see big candles on the weekly time frame, and what do you see up here? You see something like a double top or a triple top. However, this is not where we're going to be focusing. I'm going to show you on the previous price action, because if I show you the current one, then we shall need the trade to be executed in the next week. I'm going to show you the previous correct action. I'll just choose randomly. I'll just choose this bullish engulfing candle because it is one that stands out. So in order for us to know that we are dealing with this one, I'll mark it with the lines here. I normally mark it with a box, but I think the box will disturb because it's going to occupy many candles. So I'll mark it with lines here. I can just move my support up here for study purposes only for today. So you see I've marked this candle, the bottom and the up. This is the opening price and the closing price. Mark the opening price and the closing price of the candle. Good. So now what next? I'll just mark it, this one, such that we do not mistake it for these other candles. Just this line is to mark this exact candle. So now what next? So this is the opening price, the closing price, we have marked it. So we want to go to the daily time frame to see what is happening there. Mark the closing price and the opening price of the previous week's candle, and then we go to the daily time frame. So when you go to the daily time frame, what do you see? You see that price moved from here. This was Monday, Tuesday, Wednesday, Thursday, Friday. The week closed from here. This is the closing price of that candle, and that is the closing price of that week. So what do you see now? We know first of all on the weekly we are in an uptrend. Let me show you. We are in an uptrend on the weekly. So this is a high, this is a low, this is a high, this is a low, this is a higher high. So we know on the weekly we are in an uptrend. When you come to the daily, what do you see? What do you see on the daily? Same thing, an uptrend. High, low, high, low, high, low, high, low, higher high. And now, let's say, for example, we have put in a higher high and the week has closed from here. This price action is not there. So what do? You know that price is going up. So now you should be looking for only buy opportunities. Good. So within a few seconds, you have been able to determine the direction of the market. Within a few seconds, you know where the price is going and you know what you need to do. Looking for only buys. Okay. So what next? The next thing you want to do is, since the week has closed from here and you're looking for only buys, you want to look for demand zones, because demand zones will help us to buy. Now that is where you start looking for your demand zones. Do we have any demand zone? Yes. What is the demand zone? It is a small consolidation before an impulse move. What is a value demand zone? We have an indecision candle, engulfing candle, and a creation of an imbalance in the middle. So you open your demand zone there. However, this one is big because we are on the daily time frame. So what do? You're going to go to the 4-hour. And if you don't have a strategy, guys, you can use this one. It can be of good help to you. So when you go to the 4-hour, you refine the demand zone to the nearest small candle, that area. Good. So now you have refined your demand zone. You see this is a rally, a base, a rally. There is an imbalance there, so it has to be filled. So now we are going to buy when the market comes here. However, we shall set our buy limits. And this thing happens every week, guys. Our buy limits. What is the stop loss? Slide it below. That is 100 pips. I know someone will say, oh, but 100 pips is too much. Look at the risk to reward. That is 100 pips, and you're targeting the previous high, which is 354. That is 1:3. You look at the risk to reward. So now it is upon you to lower your lot size. So this 100 pips, that is on 0.1, you get $100 stop loss. On 0.01, it is $10 stop loss. So 100 pips on 0.1, this is $300. On 0.01, that is $30, 35 in fact. So a risk to reward of 0.1 is going to get you risk 100 to make $300, which is good. So you wait for price to come down to this area, or if you know that we have a demand zone here, that price is likely to come to? It is very simple. You wait for price to break structure, like this one: high, high, low, higher high, lower low. You get a supply zone up here that is going to help you push price down to this demand zone that we shall then buy from to push price back up. I hope guys you have understood. If you haven't, just ignore this one, the price action here. If you haven't understood, it is okay. I'm going to give you another example to help you grasp what I'm trying to tell you. So come to the weekly, identify the closure of the weekly candle opening price and closing price, go to the daily, look and see if there is any supply zones available. If they are not there, go to the 4-hour. If you get a demand zone, if you get them on the 4-hour, set your sell limit, buy limits, and then wait for the trade. Okay, so I'm going to give you another example just to make sure that I drive my point home. And guys, this is the way that I trade, and it is so profitable. You just have to be patient. So what do you see here? We have this week that closed here. Let's use this one here. This is the week that closed, that we are going to mark the opening price and the closing price of the no, this is the one that we've been using. This one here, opening price and closing price of that week. This one here, let me just zoom it out. Opening price and closing price of the week. Okay, so now after marking the opening price and the closing price, you need to know where the market is going. Where is the market heading? The market is still heading up. Why? Because this was a bullish engulfing candle on the weekly time frame. That means we are likely to buy. If you see a bullish engulfing candle on the weekly time frame, we are likely to buy because it shows that the buys are high. However, we don't just enter because now we know that we are going to buy. We don't just enter. What do? We look for entry triggers on the lower time frames. So you have a narrative on the high time frame that it is a buy. So now, which candle are we looking for entries? The next one here. This one is the one that is supposed to give us our entries. Okay, so this is the previous one. This is the one that we're going to be looking for our entries. So you head to the daily time frame because this is the next time frame below. What do you see? You see that this week started from 1, 2, 3, 4, 5. Started from here, came, tapped into this demand zone, bought up to around here. See guys, tapped into this demand zone here, and then bought up to around here. So after buying there, it left behind a demand zone. Let me mark it. This candle here, the demand zone. Since it is big, we can just mark from the body, from the closing price to the wick down. So it left behind a demand zone as it was going up. So this week started from here. This is Monday, 5th May. So we wait for price to come and tap into this demand zone, and then we buy, targeting this previous high. That is how we trade. So now, where do we go? We go to the daily frame, and before I even go to the daily time frame, it made a QM buy here. This is a low, this is a lower low, this is a high, this is a higher high. So leaving a demand zone here. You'll be seeing these things, guys. These things are going to be happening, and you're going to be seeing them a lot. So we come to the 4-hour to refine our demand zone for a tighter stop loss. So when you come to the 4-hour, what do you see? The 4-hour, you see there was an inducement here, and then the real demand zone was down here. This candle here. Mark it well, because if you don't mark it well, you're going to miss out. Yeah, I've marked it well. So now this is our blue line of where the week started. This is Monday. This is Monday, 5th May. So the week started here, making a double top a sign that it is dropping down. And where is it going? It is going to come in this area here. It is going to come in this area here. And you know that when it comes there, guys, there's something here I want you to see. There is a demand zone. There is a demand zone there, and there is support and resistance, or SNR. So this one was resistance broken, turned into support, giving us a demand zone and then shooting up. And when it comes back, what do we expect? When it comes back, we expect price to come and tap in this demand zone here, and then it is going to buy. Let me just mark it well. Yes, I've marked it well. It is going to buy. However, what do? We set our buy limits here. Supposed to be up to there, but it is 35 pips, but you put in a little bit buffer on your stop loss, because price can just decide to wiggle down before it can go up. So you have to be considerate of that. So you put there your buy limit, and what is your target? Your target is the previous high. That is your target. So what is the risk to reward? The risk to reward is we are risking 1, and then we are getting 4.7 as our reward. So we are, in short, we are risking 45 pips to get 223 pips. So guys, the things keep on happening over and over again. And what do you need to do? What you need to do is very simple. You just need to be patient. Mark out your zones well on the weekly time frame. Count the daily time frame with a narrative, and then look for areas that support that narrative that you're having, and then execute the trade without fear or contradiction. Because what hurts more traders is that they fear because when the trade comes, they fear to enter, because they say, oh, maybe I'm not right, I might be wrong. So they fear to enter. So when the trade comes back to their area, they don't enter. It ends up playing out well. And look at how this one played out. Gave you only bullish price action to the upside. So guys, that is all for today. I hope you've learned something from the video. Kindly subscribe to the channel, like the video if you have learned something. Also share to your friends. Okay guys, that is all. Let's meet in another video.